Hello and welcome to IGTV. I'm Angeline Ong. This is your look ahead to the week starting the 6th of March 2023. Now, first up, let's have a look at the United Kingdom because we have global construction PMIs there. Of course, the UK has had a huge amount of data out recently and results from the house builders, and it's been looking particularly weak for them. The Eurozone retail sales also dominant there on Monday, as well as factory orders, which could give traders trading opportunities. Moving on to Tuesday, when we've got the retail sales figure from the BRC, Halifax house prices as well, which will be a key one to figure out which way the UK housing market is going, currently showing weakness there. The RBA interest rate decision and trade balance will be key indicators to look out for early on Tuesday, as well as trade balance numbers from China itself. We're watching the reopening play there closely to see what happens the weekend when policymakers there divulge what the growth outlook might be for the world's second biggest economy. And also turning to the US, we've got wholesale inventories, the Fed chair testimony, and API crude oil inventories too. Moving on to some other details midweek, we've got industrial production numbers from Germany, Eurozone Q3 GDP, those are the final numbers, and from the US ADP employment numbers, as well as the trade balance and EIA crude oil inventories. Watch out for Canada as well because they have an interest rate decision there. Canada also fighting sticky, hot inflation. And on Thursday, we got GDP numbers. This is final Q4 reading from Japan, and from the UK, more house price details. And for China, we've got consumer price index data out there. That's one to watch, given inflation is such a hot topic at the moment, and producer price numbers too. And from the US, look out for the initial jobless claims number, which will come ahead of the key non-farms number, of course, on Friday, which has been delayed from last Friday. We've also got the Bank of Japan interest rate decision and producer price index data there, as well as industrial production figures and trade balance figures from the UK. But it'll be the non-farms that will be key, especially since we had that surprisingly strong number the previous month. Here to talk about this is Axel Rudolph. Thank you so much for joining us. What are the key things you're looking out for here in terms of a technical point of view?
Yes, Angeline, I mean, as you say, non-farm payrolls are really key. And if you look at the technical chart picture, what is interesting is that the S&P 500 on this daily financial bet here actually bounced off the 200-day simple moving average of 3,940. And this is really, really key because basically we did so last week as well. And as long as it holds, we may still be in an uptrend going back to October of last year. And I left on this chart this dotted line, which was the previous uptrend going back to October. And that might now, because of inverse polarity, act as resistance early next week. But perhaps we can manage to break above that resistance line with regards to the non-farm payroll data. And if so, if we were to close above it and also above the 23rd of February high around 4,026, then in my opinion, we will have formed another small bottoming formation here within this longer term uptrend, taking us back up again towards the September, December and February highs between 4,139 and 4,195. So it'll be really interesting to see whether we can hold above the low we made this week at 3,920, because as long as we do, further upside might be in store with regards to the S&P 500.
Right, thank you very much, Axel. There, we'll come back to you on the corporate side of things. Let's just move on to the corporate diary for you. And on Monday, we're looking out for plenty of earnings from the United Kingdom. Greg's kicking off on Tuesday, full year earnings there. Ashtead Group Q3 earnings and Reach as well out with full year numbers. Moving on to midweek, and we have Legal & General out with its full year numbers. The oil industry will be in focus too, given the APIs and also the EIA report. But we also have earnings from Tullow Oil, and Galliford Try releases full year earnings, and Adidas, which has been in the limelight due to the Ye controversy, is out with numbers as well. On Thursday, look out for Page Group. It's out with full year numbers. Aviva, Care Group and Gap as well. And turning to Axel now, who's been looking at Legal & General for us. What do the charts tell us?
Well, it's actually very interesting, Angeline, because basically Legal & General, if you look at their share price, has been trading sideways for the last 3 to 4 months. And that might be to do with the fact that it is controlled by about 80% of institutional investors, with 47% of the business being held by the top 25 shareholders. So nothing much really happened with regards to the share price over the last few months, and it's only up about 1% or 2% since the beginning of the year, as it continues to oscillate around this 55-day simple moving average here around the 256 pence mark. Now, with regards to trading it next Wednesday, around its full year results on Wednesday, you could look at the debt picture, for example, because debt is not really well covered by the operating cash flow. And you could also worry about profit margins, which are expected to come in lower than the previous year. But having said that, earnings are still expected to grow by 6.5% year on year for the next 3 years. And the dividend of above 7% seems to be quite stable. So from a technical perspective, what will be interesting to see is whether we can break out of this triangle formation after the full year results. Because if we were to rise above this upper resistance line here and also above the high seen in early January around 263 pence, I believe it is quite likely that we could then shoot all the way back up again towards the August high, which was made around the 282 pence mark. Having said that, if the full year earnings were to disappoint, and if we were to fall out of this triangle formation to the downside and also below the 200-day simple moving average around the 250p mark, then further downside could take us back down again towards the at least December lows around 243 pence. So at the moment, we're right in the middle of this triangle, and we'll have to see which way we're going to break out of it. And that will probably give us a good indication of the future share price movement with regards to Legal & General.
Thanks very much, Axel. Axel there with the breakout points to look out for Legal & General. The UK insurer, of course, also in focus because its chief executive, Nigel Wilson, is retiring after more than a decade at the helm, but will remain until a successor is found. So we might get details on that as well. Until then, have a great weekend. See you next week. I'm Angeline Ong with Axel Rudolph at IG. This is IGTV.
For more videos from us here at IGTV, join us on Twitter at IGcom, Instagram, and subscribe to our YouTube channel.